how do you find what to invest in? Did you approach natural resource investing sort of from the bottom up? Like, did you look at macro interest rates, employment, and all that stuff, or do you focus more on sector specific dynamics like supply and demand, for example?
So all of the above. I absolutely start from a pretty macro position because there's no point investing in the metals space unless you think that there's reason for metals prices to go up. Like it can be, I'll put a slight caveat on that. Occasionally you can have a very, very standout discovery story that works even when the broad market for that commodity is failing. But those are the exception. Those are not the rule. Those are the exception. And if you're invested in them, amazing. It can be like life-changing, but they're very, very hard to win. It's hard to win that way. The more likely, reliable way to win is to understand when the commodity space is set to do well, and then to be invested across stories that you think are particularly well positioned therein. And so, yes, I absolutely start from a fundamental space. In my newsletter, I talk a lot about global growth and interest rates and tightening and how this is all going to work in the next little while. And all of these things really matter. And they matter because metals are a growth story, excluding gold. Gold's its own thing. But in general, metals are a growth, like global growth thing. And so they don't do well unless investors generally are considering growth as what's happening in the future. And there's also a huge sentiment factor. So sentiment, by that I sort of mean, what are investors, generalist investors, what are they interested in right now? And this has been a really, really important consideration over the last few years because of the way that the Fed backstopped risk. I mean, I that's the way that I've come to phrase it in the wake of COVID. The way that they supported the markets just backstopped risk. And it meant that investors had lots of opportunity to make money in all kinds of very speculative things. And that opportunity, backstopped by the Fed, pulled interest away from things that were more fundamental in nature, like the fact that we don't have enough copper in a few years, or the fact that a huge amount of money printing, I don't love that word, but that's what it was, should, boost the value of gold. Those sort of logical arguments took a back seat to monkey NFTs and all kinds of crazy speculative things that the Fed was essentially supporting. So generalist interest, what investors are looking at, interested in, doing well in, that matters because it determines whether they are likely to be interested in a fundamental story like commodities. And of course, they will only be interested in them if the growth argument is there. So I certainly start from there. And if those boxes can get checked, then you start down the whole other path of trying to choose which stocks to own.
And where has that brought you today? Like what resources are you most bullish on, I guess? What resources are you investing in?
Absolutely. So right now we are in this very strange moment, right? We're in this moment where central banks are tightening and everybody is arguing about whether or not, or to what extent this will put us into a recession. But meanwhile, unemployment remains very low, but inflation remains very high. Like there's a lot of competing forces right now. We could talk for an hour about that. We're not going to. We're in a very strange place. And I certainly believe that the central bank is going, the US, the Fed is going to tighten at least at its next two meetings. So we are still in this tightening. And what's the tightening going to do phase. And I do think that we need to get through that to some extent and have an understanding. That generalist investor that I was just describing needs to have some concept that we're going to come out of that with growth before that generalist interest will rotate back to fundamental growth stories, right? And I don't mean like growth, stock growth. I mean like economic growth. So that's metals. Once we get some clarity on that, and I do think that we'll get some clarity on that. I mean, the US economy is pretty darn strong. Yes, tightening is it already putting us into a recession in some ways? Whatever. You can argue about it till you're blue in the face, and it doesn't really matter. At the end of the day, investors need to start considering growth and be betting on that before they're going to say, wait a sec, before they're going to bother taking the time to realize that we don't have anywhere near enough copper or silver or uranium or nickel or lithium to get ourselves through the few years that follow. So right now, is a pretty sideways, choppy, don't know. I wouldn't put near-term bets on what's going to happen with any of those commodities in the next few weeks, even months, because of the strangeness of the moment. We need to sort of get through the storm. On the other side of that storm, I think that there is a very significant opportunity in those metals that I just listed. I mean, the greening of the world is a paradigm shift in how we generate electricity, move ourselves, operate our lives. That's an unstoppable force. Yes, it slows a little when people get concerned about global growth and lose their jobs and things like that, but it's inexorable. And for that to happen, we do not have enough copper. And I could talk for quite a while about why there has not been a supply response to copper, but there just hasn't been. And so we do not have enough of the PhD of metals to make the economy grow in the ways that it has to grow over the next decade. So we don't have enough copper. Lithium was a minuscule industry 10 years ago, like absolutely minuscule. It was used as an additive in a few industrial processes. Now it's this hugely growing, necessary commodity for electrification. So lithium, I know the price seems crazy now, but the supply demand for lithium is a very bullish setup. Similarly for nickel, nickel used to be only a stainless steel story. Now we need all this nickel for batteries. It's going to double the nickel market, which is if you'd told someone 15 years ago that batteries were going to double nickel demand, they would not have believed you. Like they just wouldn't. They would have been like, no, nickel's for stainless steel. That's all we use it for. That's no longer the case. Silver. Silver panel, if we're going to grow solar panels, the amount that we need to grow solar panels to meet EIA projections for green energy, solar panels on their own would use all of silver production 9 years from now. And that's not even accounting for the fact that the Chinese, who are the leaders in solar panel technology, are significantly increasing the amount of silver per panel. So as that continues, 8 years from now, silver eats 150 or 200% of the amount of solar panels eat 200% of the amount of silver that we put out. So there's a bunch of commodities that we just aren't making enough of. There's enough impediments to building new mines because investors haven't been interested. Management of mining companies have been cautious, and permitting processes are so difficult now. There's been a big delay in supply responses to these commodity needs. So I just think it's building up to a very significant opportunity. I didn't mention uranium. Uranium is probably my favorite of them all. We don't have enough uranium either. And so I really think that opportunity is building. I don't want anyone to think that I'm saying it's going to happen tomorrow, because I do think we need to get through this strange period of tightening and what's it going to do before the growth story really takes hold and those commodities get the attention that they truly deserve. But that's my outlook. If you can just get yourself, into 2023 at some point.
Okay, so you're not saying that it's going to happen tomorrow, but could we maybe talk about timelines in terms of when do you expect these metals to move? Maybe even separately, if you want to target each of those separately, that's fine too. When do you think they're going to move, and how long are they running for? Might even help if I told you that I do like lists and checklists and stuff like that. But if we can maybe make a list on the things that you're most bullish on to the least most bullish on, if that makes sense.
Yeah.
Make a list. Tell me when do you think they're going to start running and how long they're going to run for. That's a big task, I know, but it could be fun.
All right, I will try. Okay, so I don't think that commodities that require investors to believe in economic growth, like sustainable, confident economic growth, are going to start moving until we get through the fall at the earliest. I do think we need to get through the next 2 Federal Reserve meetings, where I am at this point, from where I sit today, I'm pretty confident that we're going to get further tightening at the next 2 meetings. And so all of this trading wish-wash around people expecting the Fed to pivot and then reacting when the Fed doesn't pivot. And we got to get through all that slosh. And that's just going to take some time yet. So the next 2 meetings are September and November. I think we got to get through that. Does that set us up for a classic buying opportunity? I say classic because often November is a weak time in the commodities space. So a classic sort of November buying opportunity, sure. Or any time between now and then. I don't think that things are going to tumble dramatically. I think a lot of the losses in commodities have already happened. I think between now and the end of this year is the sloshing around while the market assesses the tightening and all of this stuff. Now, there, of course, could be surprises from the outside if Chinese growth, which is obviously has big red flags, if it really falls apart, then, then that's going to change the outlook. There's things that we have to pay attention to. But assuming that nothing too black swan-y happens, I think by the time we get into the end of this year, I think it'll be a great buying opportunity. And I think during 2023 is when we will see almost undoubtedly, uranium is the first one that I think will move. And the reason that I say that is because the US government has for a couple years now been talking, arm waving about supporting domestic uranium. Now it's finally doing it. So the Russian invasion of Ukraine and the impacts that that's had on energy, and reliance on Russian enriching facilities and all of that has expedited what was a very slow process. And so the fact that the US government is finally acting on its talk about supporting domestic, or friendly, I should say, uranium, is putting some concreteness around questions that had been holding the uranium space back to some extent. Is this market going to split into an east and west market? What are we going to do about the fact that half of the world's enriching facilities are in Russia? Once those questions get answered, those have really held uranium back in the last few months. Utilities have not been buying uranium because they want to understand how those questions are going to play out. Once we get some clarification on those questions, and then potentially along about the same timelines later this year, start to see investors starting to consider growth, like looking a little further ahead and wanting to bet on something that has to do with economic growth. I think uranium is really well poised to move on that. I think there's growing understanding of the significant deficiency in supply that we have for uranium. So uranium I think has the opportunity to go before others. I think copper, silver, lithium. Well, lithium. So lithium is obviously, the price of lithium has already surged. So it's in its own category because those equities have already surged right alongside the price of lithium. What's been really interesting with lithium is because it came from such a tiny, tiny, tiny market and has exploded into this big market and needs to explode a whole bunch, like several times more, to fill projected needs over the next 10 years. It's been held back to some extent by analysts who don't want to go too far out on a limb. And they're in sort of uncomfortable waters for usually they like analyzing copper, which is such a well-established market with these big flows and huge histories that you can look at and patterns. Lithium doesn't give them any of that. So they've all been a little bit like, analysts at banks keep putting out price forecasts for lithium. And it's like, over the next few years, the price keeps marching up, $23,000 or $24,000 a ton, and 26 and 27. And then the long-term price is 11. And you're like, how? What? But you keep going and then your long-term price is down lower. Finally, those are starting to shift. And I mean, lithium today is actually trading at like 55,000, 60,000. Like the numbers are very out of whack. And it's not like nickel trading on the LME during, the weirdness of COVID when it had that crazy price spike that was mostly artificial. These lithium transactions are not artificial. They are happening. Like offtake deals are happening. Like people are trying to find lithium and they can't. And it's because the growth in this space is so ridiculously dramatic. So I think lithium obviously has room for some correction. The price has moved very dramatically in the last 8 months. So there's room for some correction, but I actually think that equities, well-picked equities, still have room to move in lithium. So lithium is one where you have to pay attention, but there's still upside in lithium. So it's not a when will lithium move, it's a how long will lithium continue to move. And I think it is moving and will continue to move for some time. It's playing its own game, which is cool. And then there's copper, silver, and nickel, which are my other green commodities for which we do not have anywhere near enough supply. And I think that in 2023 they will make moves, once again, assuming that there aren't black swans. And the black swan that I am most concerned about is China. If China growth really falls off the rails, then all of this concept gets set back, right? Because it's all based in investors buying global growth. And if China really falls off the tracks, then that concept will similarly fall off the tracks. So that's something to pay attention to. But as long as, infrastructure spending and stimulus, which we've seen a fair chunk of from the Chinese government in the last few weeks, if that continues and is able to stabilize the housing market, which is obviously one of the big red flags over there, then I think that we're going to have a good year in 2023 for those other green metals, because the supply demand metrics are just, they're just not doable.
So you do think that we're going in some sort of a commodity super cycle, if you will?
Sorry about the barking dog. Someone just knocked on the door.
No worries. Bring him on the camera. I'll ask him some questions. They're probably good boys or girls. So
right, she's a very good girl.
Okay.
A commodity super cycle. So the interesting thing about that is that I need to before I would go that far out on a limb. So the supply demand imbalances here support that statement, support a commodity super cycle. The kind of super cycle I would love is what we had in the 2000s with the China growth story, which is a sustained rise in prices as this behemoth of demand became more apparent and investors bought into that story, and it rose, and that was great. What's weird today is that investors are not paying attention to commodities, and there's all this, investors are paying attention to other things. So it's kind of like it's on pause. And yet at some point it's going to have to just go. And so is that a super cycle? Does that look more like a spike? I don't know. And so what investors are interested in once we come out the other side of this central bank tightening process and the recession question, that to me is incredibly important. If we come out the other side and investors do not see a Federal Reserve backstopping risk, like it has really since the great financial crisis, but especially since COVID, then I think there's a real chance that investors go back a little bit more to the investing approach that, like a more normal or conventional investing approach, where you look around the world, you see growth, you look at what the numbers say, and you buy things like there isn't enough copper. If the Federal Reserve does pivot early and inject liquidity in a manner that's perceived as supporting the stock market, which of course is not one of their mandates, but that has been perceived as one of their goals for the last number of years, then we might end up back in the sort of bull market that we had following COVID, which was a much more speculative, not based in fundamentals market. So I really don't know what the shape of this commodities market is going to be. I need to understand what investors are interested in, what generalist investors, how they approach investing coming out the other side of this tightening and recession question before I'm going to be able to predict the shape of the commodities market. I can tell you that the lack of supply is very, very real. I just don't know whether that's going to create a nice sustained market of growth that gives us all lots of opportunity to benefit, or whether it's going to be more spike-ish and then and awkward, because spikes are always more awkward as investors to manage, because there's just some strange things that have been going on with investor interest.
What if you talk about potential over the sort of over the medium term, like 3 to 5 years maybe? How would you rank these commodities in terms of potential? Because it seems to me that you rely heavily on the supply and demand fundamentals. Talking about broken supply chains, uranium should be coming up first, right?
Yeah, for sure. So, I mean, uranium obviously gained nicely through 2021, or sort of over the last year. Again, that could be its own entire interview. We could spend an hour talking about uranium. There were reasons for that. It has come up off the bottom, which is great. I think there's absolutely room for So uranium's trading at 48 bucks a pound these days. It's been right around that mark for quite some time now. The uranium price needs to sustainably stick in the $70 range, $70 per pound range at the least to incentivize enough new mine production. So that's a 50% gain on the price today, despite it having moved already over the last year. And of course, one of the interesting things about the uranium space is how small the equities world is in uranium. So when investors get interested in uranium and they decide they want to own exposure, it's like shooting, Niagara Falls through a little garden hose. Like, it really forces pressure into those equities, because what are there, like 70 uranium stocks in the world? Like, there's just not that many. So a lot of interest gets pushed into a small number of stocks. So
That's what we saw last week, right? Last week it was a massive week for uranium for the URNM index. Today's a 10% day for the URNM index. Some stocks are up much more than that. So you see big personalities like Michael Berry, Elon Musk tweeting about nuclear, Japan doing big shifts. That gets some people interested, and even only those people entering the space, they create these massive spikes that we're now seeing.
Exactly. And when you get generalist interest into uranium, it spikes. That is what uranium does, because it's such a small space. So, will the price overshoot 75? Quite likely. When this surge of interest happens, it will almost certainly overshoot. It could overshoot significantly. It could, we've seen uranium get to 130. Is it going to get to 130 again? Definitely possible. I don't think it would stay there. I don't think there's reason for uranium to stay at those levels, but for it to trade in the $70 per pound range, maybe even a bit higher, that's the real price of extracting uranium from the ground. That's why I say it has to be. That's the real cost to get the uranium out of the ground that we need to create the nuclear fuel, to create the baseload energy to power the green future, right? That's my perspective on that. So that's, and if the uranium commodity price has to go up 50%, I mean, who knows what equities could do? Do they offer 3 times that? Do they offer 10 times that, because of what we just spoke about in the uranium space and how small it is? Multiples of the commodity price gain are certainly on offer in the equities when you get a bull market. So that's that. Copper, another interesting one. Do I think the copper price needs to double from here? Yeah. Do I think that it might sit here for a while until the copper is a really interesting market? We call it the PhD of metals, but I disagree with that to some extent, because it's a very short-sighted PhD. It's like copper trades based on supply and demand today and over the next 3 to 6 months. Like, whenever you have a strike at a major mine, and so that there's questions about supply over the next few months, or when you have, Chinese power restrictions that are shutting down smelting, and so there's not going to be as much either supply or demand, depending how you look at it. The copper price moves on all this short-term news. I just wish that the copper market was a bit more forward-looking, because in 3 years, we don't have enough copper. So I wish that the PhD were more forward-looking than that. It's not. There's no point wishing for something that isn't. I do think that the copper price needs to move up 50% at least from here, again, to fund the gap. There just is a huge gap. The gap is not being filled because it's incredibly difficult to permit and build new copper mines today. So you need to have significant price incentive to get companies interested in taking on that challenge. And so that's what just needs to happen with copper. But we can't green the world. We can't grow the world, whether green or not, without a whole bunch more copper. And so the copper price needs to move up dramatically. Will that happen again in a sustained way or in a spike? I feel like a spike might be what happens, and it'll be similar to the uranium play out, where all of a sudden politicians are like, whoa, we need to do something about copper. And the copper market will be like, yeah, we've been talking about that for a decade, but anyways. And then there will be political pressure, and then maybe permitting processes will get expedited, but then the generalist interest will be there, and it might create quite a sudden move in the copper price. I don't know which it's going to be, but the copper price needs to move up significantly to incentivize the supply that we need. So I don't actually, oh, right. Was I talking price targets? Silver is an interesting one. Silver obviously has its investment, like its precious metals angle, and then its industrial angle. And what I think is most interesting with silver is that when it's on the down, it gets like cut doubly. So it's sort of like the precious metals, buying precious metals, gold and silver as an investment hedge, a safe haven. That's been working, but not of particular interest of late. Gold has done just fine, but silver, if gold's doing just fine, silver generally slides. If gold's doing well, silver outperforms. So silver sort of does what gold does, but more on the up and the down. So it's been sort of hurting more than gold lately. So it's been getting hurt on the investment angle. And then on the industrial angle, like all these other commodities, with no investor interest in economic growth, it has not been benefiting from that story either. So it's like it's been getting hammered from both sides, like a lack of interest from both of its angles. When it turns, it could turn quite like, silver also needs to be worth a lot more than it's worth. Does it need to be worth twice as much as it is today? Yeah, very likely. Again, to incentivize new mines, to incentivize the production growth that we need. So, I mean, it's very easy for these prices, for silver, for copper, for uranium. It's easy to see significant gains in these prices. Like I said before, I just don't know exactly what shape those are going to take. Right as you and I speak today, it's nice to see uranium moving. It gives us hope that one is going to maybe lead the way. There's reason for that makes sense. So let's hope that it does lead the way.
I definitely hope my portfolio is definitely overweight uranium, over 50%. So I'm happy to see it moving finally. You're reminding me of something though that you said last week on Twitter, was that you've been selling some of your juniors. So if you expect the commodities to move, what was that? What was that all about?
As we approached the Federal Reserve tightening, sort of back in the spring, I certainly sold some stocks. I should have sold more because obviously the spring things were stronger. But I saw this tightening ahead and I exited some positions. And then through tightening, I really expected commodities to underperform. And so there was quite a few months there, through late spring and through the summer where I just wasn't buying anything. I wasn't interested I just saw darkness ahead and I wasn't interested in owning anything. I missed a few outperformers in that time. Like I missed some lithium opportunities in that time. But anyways, now I do think that we're getting closer to a time when we might already be in a time, or we're getting closer to a time when buying makes sense. But I don't have an unlimited pool of money. So part of it is that I need to sell some stocks at losses to free up capital for opportunities that I think are better. I also had some nice gains early in the year, from some very nice gains. Like I owned Great Bear and that payout happened this year. And Great Bear royalties, that payout is happening right now. And there were some great performers earlier in the year. And so there's just classic tax loss accounting here. So if I can sell some stocks at a loss, it'll help me manage some of the tax implications of those stocks that did well earlier in the year. And so if I've decided that I want cash and I'm happy to lock in some tax losses and I see buying opportunities ahead, okay, so how do I decide what to sell? Well, I go through my portfolio and I check in with the investment thesis for each stock. And so, I'm sure we all appreciate that you need to have a reason to own each stock. Where do you think it's going from here? And, if A or B or C happens, what does that do to your thesis for why you think this stock could work? And one of the hardest parts about junior mining investing is access to capital, right? For the companies. And I have never run a junior mining company. So I feel bad when I criticize junior mining companies for when or how they did or did not raise money, because I absolutely appreciate that those are very difficult decisions. But at the end of the day, if a company doesn't have access to capital, then it becomes stagnant. It stops doing anything. And once it stops doing anything, the investors trickle out. And then the share price just goes down and down and down. And then it becomes harder to raise capital. And so reestablishing any momentum once that trickle down slide is underway becomes very difficult. And I absolutely appreciate that there's companies that want to just sort of hibernate, They don't want to dilute their share structure. But there's also a need to communicate to shareholders about what you're doing. If that's your decision, that's what you're doing. And so when I go through my portfolio and I encounter stocks that still maybe in their corporate presentation suggest that they're going to do this and this and this, and they have these timelines and these projects that they're going to drill or these goals that they're going to achieve, but they clearly have no money and they haven't been putting out any news and they haven't told anybody that they've changed those plans over months now. They didn't raise money in the spring. Now their share price has trickled down. What are they going to do? It's very hard to access capital as a junior explorer if you don't have momentum right now. It gets hard to hold on. It becomes a time value of money question. I still believe in a fair number of those projects. But if they're just stuck in the mud because they don't have money, they don't have a plan to access money, and they didn't communicate what they plan to do about this obvious question, I can't support that stock. Even if exiting means I'm down 50%, I just can't support that stock. And so this is the dance. It's unfortunate, but with junior mining, access to capital is a huge, huge factor. And communication with shareholders is important. I think in that tweet, I said shareholders matter, right? And so if you as a company have decided that you want to put the brakes on, you don't have money, you think that the markets are going to turn up in Q1 and you're going to wait till then, that might be fine, but you got to say so. You got to tell me. You can't just put your head in the sand and not say anything for 6 months and expect your investors to stay around. It just doesn't work. So those guided a bunch of my decisions last week.